welcome. This is the earnings special on Hindustan Unilever. We just had the numbers come in. It seems like the numbers are largely in line with Bloomberg consensus expectations. And perhaps the most important number that we are watching out for was the volumes growth, the underlying volume standing at 12%. So while the previous two consecutive quarters, we did see 11% volumes growth, this time around, the volumes growth is higher at 12%, and that perhaps could be a positive when it comes to HUL. Of course, as you can see on your screens out there, specifically the net sales at around 9487. Well, again, largely in line with what we were going with, and it's the same for the net profit at around 1,529 crores. So not too much to speak for. Of course, that double-digit growth stands, and as the management was telling us about the last quarter as well, that should we see this double-digit growth in volumes, that is something that could support the trend, and that is something that could build on as they move into the next financial year. And on the whole, of course, it's also working on, well, a relatively low base, but not to take away the fact that we do have that 12% volumes coming in. We have Tejaswini Kumari of IIFL joining us at this point in time. Tejaswini, hi, good afternoon. Thanks for joining us.
Hi, good afternoon.
I'm sure you've taken a look at the basic numbers at this point in time. How are you assessing these?
The numbers looks great, like it is in line, broadly in line with our expectation, like a bit here and there, but overall the number looks good. So I believe the volume numbers I have not seen yet, but I believe this is broadly driven by the volume numbers only. Because we were also expecting...
Tejaswini, the volumes, the underlying volumes at this point in time stand at 12%. So
okay,
just to give you perspective there, yes.
Yeah, so we were expecting around 13% volume growth. So the numbers are broadly in line with the expectation.
And where do you think this growth is coming from, Tejaswini?
So this must be like in the last quarter also we have seen a good volume growth from the company. So broadly there are various factors which must have like driven the volume numbers. First is what we all are talking about is the rural growth, and that is also driven by the loan waivers and the MSP increase. Second is obviously the stabilization of the market channels, because everything was hit before GST and all, the wholesale and the direct reach, even the general trade. So that also is improving. So overall, this is a combination. I think this must be a combination of everything. So basically, we will wait for what the management
Right. Okay, just hang on, guys, because I think we have the management of HUL talking to us. This is what they're saying. Listen in.
Thank you for taking time out to attend this session. Let me first start by giving you a summary of the changes to our reporting segments, and then I'll go into the market context. As announced earlier, we have integrated our foods and refreshment divisions to increase agility and better serve consumers. Accordingly, the company will report its results in the following three operating segments. Home care, which remains unchanged. Personal care is now designated as beauty and personal care. And foods and refreshments has now been integrated, and this includes food solutions. Now focusing on performance. From a market point of view, we are seeing a gradual improvement in demand. In this context, we have delivered another quarter of strong volume-led growth. Our reported revenue growth was 3%. Our comparable domestic consumer growth, which is like for like, after eliminating the accounting impact of GST, grew at 16% with underlying volume growth of 12%. Our comparable EBITDA margins expanded by 100 basis points, and our EBITDA at 2251 crores was up 21%. Our profit after tax but before exceptional items, PAT BEI, stood at 1567 crores, up 21%, and our net profit at 1529 crores grew by 19%. On the cost side, our cost of goods sold was lower on account of benefit of mix, judicious pricing, and savings. We continue to invest behind our brands. Our increase in A&P spend was driven by investments in innovations, activations, and competitive actions in the marketplace. Now let me spend a little bit of time talking about our divisional performance. All our three divisions have during the quarter delivered double-digit volume growths. Home care, we have delivered a robust performance with comparable growth of 20%. In laundry, all our key brands grew in double digits with good growth momentum. In household care, Double-digit growth was led by strong performance in Vim. Domex Liquids was relaunched in South India, and Domex Powders extended to new geographies. In beauty and personal care, growth was broad-based and across both personal products and personal wash. In skincare, Fair & Lovely and Pond's registered strong growth. Double-digit growth in hair was led by the premium portfolio, and Indulekha delivered another quarter of strong performance. Growth momentum was sustained in color cosmetics with the continued and successful rollout of various innovations. The Lakme 9 to 5 natural range of makeup and skincare products infused with aloe vera was launched during the quarter. Deodorants delivered an impressive growth with Axe Ticket gaining traction. Personal wash grew well with a high growth trajectory being maintained by Dove and Pears. Moving on, foods and refreshments witnessed ice creams and frozen desserts. In beverages, tea delivered broad-based double-digit growth across key brands. In coffee, Brew Kannadigara was launched in select geographies to cater to local taste preferences. Ice creams and frozen desserts grew in double digits during the season on the back of innovations and geography expansions. Foods registered double-digit growth led by Kisan and Nor. As you're aware, we also launched the Lever Ayush breakfast range in Tamil Nadu. From drivers of growth, I think it continues to be relentless focus on innovation, impactful activation, and sharper in-market execution. We continue to sustain investments in market developments and in emerging categories. Looking ahead, we expect gradual improvement in demand. Crude volatility and currency inflation are key watch-outs. Also, in the near term, a step up in competitive intensity is anticipated. Our focus remains on volume-driven growth and consistent improvement in operating margins. Our strategy, therefore, remains unchanged: consistent, competitive, profitable, and responsible growth. Thank you.
This is Priya from CNBC. I wanted to understand with regards to rural growth. The last time we spoke, you said that you were a little bit cautious about rural growth, and you said that in the first quarter, when we really know whether the rural growth has bounced back. So is it back to historical levels? Is it growing 2 times or twice the rate at which urban has been growing? And secondly, on the input costs, I want to understand what is the kind of trajectory that we can see, because you said that it's a space that you will continue to watch out.
Yeah, but Priya, let me be very consistent. I had said last quarter and even a quarter before that we should wait for a few quarters to see if there is an underlying trend which is emerging. Yeah. So we aren't yet at a stage because, the base, this was the pre-GST quarter last year. So it would be wrong for us to look at just the headline numbers and come to a conclusion. The quarter has been very decent for us with 16% top line, 12% underlying volume growth, and 100 bips improvement in margins. So there is very clear we are satisfied with the performance. It is broad-based. If I look at it from the market perspective, certainly rural, which went through a pretty lean period in 2016, 2017 was a year of massive disruption in the market, so I wouldn't want to pick up 2017. But definitely rural has started growing, and it now from all indicators, it is growing at a rate faster than urban. But the markets are still, if you look at offtake, not the growth numbers, the markets are growing in the vicinity of 6.5%, and the volumes are growing at 5.5% for the markets in general. They are better than the 3% kind of volume growth that we saw in 16. Yeah, but they have certainly improved, and we are very hopeful that they will continue to improve. But a definitive trend, let it normalize, the base become normalized, then we will start seeing.
So on the input cost, if you really see in the quarter, I think there are two elements playing out here. First, when you see crude and crude related, we have seen a significant increase. We've also seen depreciation coming from the currency. However, when you start to look at some of our veg oil portfolio, which is really not cleansing, we've also seen costs being low when you compare year on year. So therefore, when you look at the totality of the mix, in the quarter in question, we may not have seen the kind of inflation. However, when you look into the future, and I think that's something is a key watch out, as we said. Now on the crude side, we see a lot more volatility. Also driven by some of the international factors. Currency continues to be under pressure. And we also expect that some of the flow through of the crude related will now start to come in. So it's an area of clear watch out, and we'll have to see how to dynamically manage our business.
Can we expect some kind of price increases going forward?
So I think here we've always been consistent. Look, there are many levers to run a business and how to maintain your profitability. Judicious pricing is one of them. Even in the quarter in question, we have taken some price increases without losing market competitiveness. So clearly we will look at all levers, and where required, when required, we will look at judicious pricing.
One compulsory commentary. We've completed 1 year of GST. Just want to understand, July 1st is when we completed. So just want to understand the commentary. Has the industry completely settled down from the impact of implementation last year? Or are we still seeing some kind of residual issues in some kind of, probably in trade pipeline or elsewhere?
Would you like to?
So I think if you see from an implementation execution point of view, I think it's all now well settled in. Yeah. So I think we've gone through GST 2.0. We have seen the e-way bill implementation. So at least from an operational point of view, I think it's fairly stable. And I think we've talked about it either when you see from a trade pipelines point of view, there is also stability. So all in all, I don't think from an operational point of view there are any issues, and actually now it's business as usual. Having said that, I think there are still elements. I still think there is working capital which we need to unlock. As we have gone through filing of our various returns and looking at some of the refunds on exports and looking at some of our fiscal units, there is money which we still need to realize which is stuck up in working capital. But day-to-day operations, I think it's business as usual.
I wanted to talk about pricing once again. Do you think, over the last year we've seen pricing go through a significant change, and now do you think pricing power is back with companies? Do you think that companies are in a better position to sort of take the lead and sort of increase prices going ahead?
I wouldn't want to comment on the industry at large. I think what I'll do is comment on Hindustan Unilever. First is, last year when the GST rates went down, we took the prices down of our products and passed the benefit to the consumers. So the good bit is, even when there is some inflation, the price of our products would still be cushioned by the reduction that took place after GST. Yeah. Now, price volatility is not something which we are seeing this year. It has always been there. Whether it is veg prices, whether it is crude prices, the prices go up and the prices go down. I think what is critical to remember is, as Hindustan Unilever, we have the necessary agility to respond to the volatile prices. Yeah, so we are always judicious, as Srini mentioned, in terms of price increase, and we will always keep price value equation when it comes to looking at it from the lens of consumers.
The price of the stock went up ahead of earnings, and investors are becoming more conscious and turning attention towards how earnings growth are justifying valuations. How would you say, or for how long would you say that HUL's dream run on the bourses is going to last?
See, I would not like to comment on the stock price, but I would definitely want to comment on our financials. And if you look at it over the last 7-8 years, we have consistently improved our margins. I think 26 out of 27 quarters, we have improved our margins. Even during the toughest period, we have grown our business. So I'm very pleased with how we have navigated turbulence and how we are reshaping our business for the future.
So will the impact of MSP also have an impact of your raw material prices? Will that be also a factor in pricing? MSP prices if the government just finalized?
See, first is, we certainly believe that the government needs to do whatever it takes to put more income in the hands of farmers. Yeah? 67% of our countrymen live in rural areas. It's very important for us not to look at just absolute GDP growth, but for inclusive growth. From an FMCG perspective, absolute GDP growth does not correlate to the growth of FMCG sector. What is very important is when you put more money in the hands of more consumers, yeah, which is another way of saying inclusive growth. So we completely support government's move to put more money in the hands of farmers. Yeah. As far as agriculture inputs are concerned, of course we have agriculture produce which goes in as raw material. But the two big items for us are the are the crude oil prices and the vegetable oil prices. Srini alluded to that. Crude oil prices have gone up significantly from the same time last year, whereas veg oil prices, they remain benign so far.
Sir, last quarter you mentioned that rural growth was witnessed in certain parts of the country. Does this growth continue to remain only in these parts of the country, or is it more widespread in this quarter?
You know, there are pockets of the country. You know, ours is a big country, and that is the reason we had the winning in many India strategy, because India does not grow at the same rate everywhere, every quarter. So there are pockets where the growth is good, solid double digit. There are pockets where it is in low single digit. Yeah, so.
You could just highlight which are these pockets which are growing in double digits and which are the pockets that are growing in single digits, at least geographically, if you could give us a broad-based area.
You know, again, like I would say, no point in talking about a quarter, because it might not give you the whole picture, because it also depends on the base.
If you could just tell us what really happened, in which parts of the country, it would just give some clarity.
You know, again, it varies from a product category perspective. So one would not like to get into giving you different geographic, because it varies quarter on quarter. But what is important to pick up is, on an average, rural has started growing. The volume growths, which were languishing in the vicinity of 3.5% on a total basis, have now moved up to 5-6%. And rural, which in 2016 again were less than urban, are now growing faster than urban.
So the Finance Ministry is currently considering a proposal to impose GST even on the free product or the promotional product that earlier was that's being sold by FMCG companies. So have you all been called by the Finance Ministry with regards to this proposal? And so, if this proposal comes into play, how will you, as the leader in this category, really react to this?
See, first is, we have also read it in the newspapers, just like you have done. Second is, as a company, we comply with the law of the land. So if the Finance Ministry implements a proposal, yeah, we will take whatever it takes to implement the law.
But so, how would you do it? Would that cause you to take price off?
Let us first see the rule, let it come into effect, and then we will be able to. Otherwise, it becomes speculative.
So this is the last quarter in which we have a low base effect, right? So what would it exactly look like for you in this quarter?
You know, as a principle, we don't give guidance. So wait for another 3 months, and you will see how this quarter is. That is the very reason why we keep saying that wait for a couple of quarters before we can say whether a definitive trend has emerged.
Going back to my previous question, so you said certain pockets. Is that Middle India by any chance?
See, Middle India for us has been growing majestically. Yeah, this was one of our core strategy. Now you have to understand that in Middle India, the penetration levels are much lower, or the per capita level of FMCG consumption is much lower than the rest of the country. Just like rural India should definitely grow faster than urban, similarly, Middle India should grow faster than the rest of the country, because they're coming from a very low base.
A little bit more about the Ayurveda, the herbal section, how your comment on performance of Hindulekha, as well as Ayush now that has been launched pan-India.
See, natural now is a very integral part of our strategy. Yeah, and we have, like we have articulated earlier, we have a 3-pronged strategy. We have a master brand, we have specialist brands, and then we have natural variants in our existing big brands. We are very pleased with the performance of natural portfolio. Natural portfolio is growing at about 2.5x the normal growth rate of the average growth rate of the company.
Sir, a quick word on the kind of what you heard from the government on the funds that was deposited with regards to the price, the anti-procuring and all of that. So, have you heard back on?
The government has collected the money from us.
The Maharashtra government has recently banned plastic. UP government has also banned. Tamil Nadu is also looking forward. So, sir, do you think it will have an impact on the demand? And are you looking for any alternate packaging? So, and my second question is on buyback. So, if government will decide the buyback price, it will be a concern, or what impact will you have?
See, first, this is a very fast evolving field when it comes to plastics. And at the World Environment Day, we as a company had made a very clear commitment that by 2025, all the material that we use will be either recyclable, reusable, or compostable. The other commitment that we had done, that 25% of the plastic that we would be using in our packaging would be recycled plastic. The third commitment that we had done, that in a decade ending 2020, we would have reduced the plastic used in our packaging by 1/3. So we are developing alternative technology. We are working to create with the government a very clearly framework which can be implemented as part of extended producers' responsibility. And as a large company, we are on the forefront of how we should manage plastic waste. We firmly believe that plastic has been a great invention of our times. It has allowed great products to be accessible by the masses at affordable price. But I think the issue is with the wastage of plastic. And we are working on various fronts to help the government and work with the government to solve this problem.
So my second question was about buybacks. If government will decide the prices of that buyback, especially the shampoo pouches, if government will decide the buyback prices, what impact it will have?
See, this is like I said.
It should be decided by you guys.
See, this is an evolving field, and that is the reason why we are saying that the extended producer's responsibility should be a national framework and should not be a framework which is determined by each state. That would not be practical. And that is what we have been advocating, and that is what we believe we should work with and implement.
So what about creating products that are healthier with low sodium, with low sugar content? A lot of brands have come up and they've come up with plans they've taken pledges to reduce the content.
So that's a continuous quest for us. And we don't just look at national guidelines, we look at global guidelines. And a large part of our portfolio already meets the maximum health standards when it comes to sodium intake or salt or sugar intake. And we keep working on innovations which will keep complying with the highest standards.
Thank you very much.
Thank you. Always a pleasure.
Thank you, sir.
That's the management of Hindustan Unilever telling us about what we can and what we shouldn't predict, at least with respect to the kind of trends that we're seeing in volumes growth. And just like they said in the last quarter, that they are going to have to wait for a few more quarters before they can actually establish a trend which suggests genuine recovery in rural as well as urban areas in terms of demand. One thing is certain, that two things that the management has acknowledged is that the growth in rural areas is a lot faster than the urban areas. Similarly, the growth from middle India, again because of the low base, is a lot faster than the rest of India. A lot of the products continue to do well, and as per their press release as well, I am looking at the beauty and personal care, which has been pushed by Fair and Lovely and Bonds. And again, do remember they have also clubbed a few of their segments. So while home care remains as it is, and that continues to show robust growth, and they have said that Domex powders has been extended to new geographies, they've clubbed beauty and personal care into one segment. And actually it is the same segment, personal care, but just that the beauty products are now part of the name, and foods and refreshment has actually been clubbed together. And this is how we're going to start seeing these earnings come through as we move into the next few quarters as well. And of course, the point that stands out for me is that while in comparison to consensus, the revenue number is just a tad lower, we are looking at a substantial uptick in your EBITDA margins at around 23.7% as against 23%, which was what the expectation is. And of course, you can't take the fact away that the volumes have come on the upper end of the expectations. And Bloomberg Quint's range was 11 to 12%. They've come out with 12%, and I think that is something that well, investors and traders will take heart in. Let's wait and watch as to how HUL opens in tomorrow's day of trade. But as far as the earnings are concerned, well, it doesn't look like a bad set. Certainly not a disappointment considering the way margins are panned out as well as the volumes. That said, we're going to have to wait and watch for how it opens in trade today. But that is all that we have in this earnings special on HUL. Lots more lined up, so stay tuned in Bloomberg Quint, and we'll keep bringing you more.